Hey folks, David Frost, MyStrategicForecast.com. Welcome for another episode of Common Sense Technical Analysis. Today is Monday, June 30th, 2014. The first half of the year is behind us. The second half is in front of us. You're looking at a chart of the SPY. More of the same today. Another light volume, float around, do nothing day. And I think you're going to expect basically an entire week of that. Maybe we have a down day. If we're going to have one, it's probably going to be tomorrow. And you may only have a half a down day, and the market may bounce back in the afternoon. But if not, it certainly will on Friday, in my opinion. And then, Wednesday. And then Thursday, float up, float around. And then we'll get back down to business next week after the 4th of July weekend. We're still a couple of weeks away from a big turn date, so I don't want to necessarily harp on that too much. You all know where I stand. Anybody watching these videos understands what I'm looking at for the second half of the year. So basically, light volume, float day on the SPY, nothing going on. Let's jump over and take a look at the interest rate market. Same deal. You basically had slight down move today in yields, which means a rise in bond prices. Here's the 10-year. We're making our way down. I don't think we're going to come much farther down on this move, but you never know. As far as I'm concerned, we're probably a little overdue for a bounce back up towards this area here. We'll see how it plays out, but that's what I'm looking for. You all know I'm in the TBT trade, which is inverse the bond market. I'm staying with it, even though it's going to take some time, I think. There's a reward at the end, so I'm not afraid to stay in that trade for a little bit more time. 30-year yield is the same scenario, same routine. I think this is overdone on the downside right now. I think it makes sense to me if we have a float up for the rest of the week in the markets, we might get a kick up in the interest rates with an up market, and that's kind of what I'm looking for the rest of this week. And then we'll see how that unfolds, and we'll see how we should be positioned for the after the 4th of July holiday weekend and beyond. Gold was flat in the morning, and then all of a sudden it just shot up today. Let's take a look at the intraday chart, see what we're looking at here. We had down here was the opening today, and it just rocketed up all day long. So go figure. Gold is strong. Let's go back to a daily chart of gold, and you'll see that you've had this big up move, sideways consolidation, and you're in the middle of another up move. So you're probably going to test this 128.30, and you might even get up here to this gap fill here at 130 and change, or maybe this gap window at 129.5. We'll see. But as far as I'm concerned, I think there's a better low coming, and I've been talking about this, a better low coming in the month of July, which is starting tomorrow. So I wouldn't be long gold here. I'm not sure the upside is that great from here. I think it's limited. I think there's a better low, but I'm not looking for a low down here in no man's land. I'm looking for some sideways consolidation and then another move higher in, let's say within the second half of this year. So latter part of July into August, September, I'm looking for some strong bullish gold market action. So we'll be patient for the July low and see how that plays out. Oil was down a little bit today. This is the USO. This is nothing more than just sideways consolidation. I think still, I've been talking about this for quite some time. Higher prices ahead in oil. No reason at all to be short oil. Not with all the geopolitical stuff, the Middle East, Russia, all that stuff. Absolutely no reason to get in front of oil. However, there will be a time to be short oil. It's just not here yet. But we're coming up close. Here's another one that I began to discuss last week, and this chart is GDX, which is the gold miners, and it actually looks stronger than the gold chart in and of itself. But I want to take a look at a longer term chart, show you what I'm looking at. Here's a weekly chart. Now you see this low here, you see this higher low here. Well, guess what? You could make a case that this is a head and shoulders formation coming. And if I can draw in the neckline here, let's see if I can do that. Something like here. Okay. Now, this isn't perfect, but here's a shoulder, here's a head, here's a shoulder. Now, if you come up and break 30 on a weekly close, this probably goes to 37 in that neighborhood, 35 to 37 up in this area here, maybe as high as this pivot high. Okay, we're going to watch that. Let's take a look at the monthly chart and see what we see here. Okay. Yeah, it's not as pronounced on the monthly chart, but that would be a big move up here. That would take out, that would challenge this red bar high here. Now, what would that coincide with? Let's take a look at a Fibonacci retracement of the GDX from that pivot high to this pivot low. Okay, and what do we have? Lo and behold, it's funny how these numbers work out, folks. You just can't make this stuff up. I didn't do this before I just did it in front of your eyes, but 38.2% retracement is at 38.12. Now, didn't we just say on the weekly chart that if we break above this neckline here, that it could go all the way up to 37.38? I believe we just said that. Well, why? Well, the way you get that number is you take the low and the distance from the low all the way up to the neckline, and I just estimated it, eyeballing it, and then you fold it over up to the upside, and the breakout would be from the neckline up that same amount of points, and guess what? You come up to this $37, $38 level right here. So that starts to make sense. So we're going to watch that one closely. If we get the better low in July in gold, I think you'll get the same better low in the the GDX. And if that's the case, we're going to have some plays in gold, in the metal itself, GLD, and then we're going to have some plays in the miners, maybe GDX, and some of the individual miners themselves, because some of them will certainly go up much more than the GDX will go up. So we want to participate in that. So watching closely there. I'm going to keep the members abreast of the GDX ETF unfolding and how that's going, and we'll take it from there. So for tonight, I think that's about a wrap. Not much happened. Quiet markets. Expect quiet markets for the remainder of the week. Maybe one down day if it's going to happen, probably tomorrow. But that could be a short-term buying opportunity for those with that want to play the float up into the 4th of July long holiday weekend. David Frost, MyStrategicForecast.com, Common Sense Technical Analysis. Thanks for tuning in, folks.